Hello, Chris Green here with the Flood Insurance Guru, and today we're talking a little bit about letter of map amendments, and we're talking about how a letter of map amendment can have a big impact on flood insurance costs. So what is a letter of map amendment? If you haven't checked some of our videos, blogs, podcasts, where we talk a lot about the letter of map amendment process, this is where your flood zone is changed. Maybe from a special flood hazard area to a low risk. FEMA usually requires several documents like a property deed, an elevation certificate, copy of the first flood insurance rate map, or a tax plot. You know, all these different documents. But what happens is if you do go through this process and it does get approved, it takes you from that high risk area to the low risk area. The benefit of this though now is that you can get preferred rating through the National Flood Insurance Program and even many private flood insurance companies. So this might mean that your premium goes from $2,000 a year to $400 a year. So a letter of map amendment processes can be very beneficial to flood insurance costs. Now, if you've had one of these done, should you continue to carry flood insurance if you're not in a special flood hazard area? Absolutely. Almost 30% of flooding occurs in these non-required areas, or what they call minimum risk or low risk. So it's really important to understand that. So if you want to look at the letter of map amendment process, get a better understanding of it, or understand what your flood insurance options are, look at reducing your flood risk exposure or your flood insurance cost, click below to visit our website, floodinsuranceguru.com. Remember, we have an educational background in flood mitigation, which means we can help you understand flood risk like this right here, your flood insurance, and mitigating your property long term.